Is it worth it money-wise to be a private investigator today? Let's just dig into that question and discover the pros and cons from the financial perspective of being a private investigator. Gerardo Matta, a good viewer here on the PI Guy channel, dropped this question in the comments. I recently got the opportunity to become a PI. Would you say it's worth being a PI? I understand that the job has its pros and cons, but is it something you would consider a long-term position? Thanks for the great question, Gerardo. I really do appreciate it. And if you have a question like Gerardo did, just drop it in the comments below. And if I use your question for a future video, I may give you a shout out too. One of the most important things you must consider when looking to becoming a PI is what your fees will be. As with any business, your selling price is what determines the bottom line for your business. There are expenses to be sure, and yes, I know those expenses help determine the bottom line too, but the one factor you have total control of in your PI business is your fees. Yes, you can and should work to control expenses as much as possible, but when it comes down to it, there is not a lot that you can control when it comes to expenses. A good example is your utility bills. Let's look at internet access really quick. You may have several options available to you for internet service providers in your area, or you may have only one. If you have only one option, then the only thing you have control over is which service package you choose. And if you have multiple options for providers, then you have a little more control, but once the provider and the package has been chosen, you do not have much ability to make that expense lower. And all of your expenses, folks, will go up over time. That is right, there is no bill that will go down over time. They will only go up in cost to you. When you look at the other necessary expenses like insurance, cell phone, data access, and others, I can guarantee you over the long term, these expenses will go up over time. So what is the secret to financial success as a private investigator? Hang on, okay? I will be getting to that in just a moment. Let's now look at the one thing you do have control over from the financial perspective in your PI business. That one thing you have control over is the rates your firm charges to the clients. And your rates, folks, will determine your bottom line on your P&L, your profit and loss statement. The bottom line of your P&L is all of your income, less all of the expenses for the company. This, for most private investigators, is what you make at the end of the day or at the end of the month or at the end of the year. Most PI businesses are single entity, owner-operated, limited liability companies, or what we affectionately refer to as LLCs. All of the profits or the losses of the LLC pass through to you, the owner of the company. Now let's look at the rates you charge as a PI. If you are already a private investigator, I want you to grab a pen and paper and jot some things down really quick. And if you are not a PI, but you are considering becoming a PI, I want you to jot some things down too. Write down what your hourly rate is or what you think you would charge for an hourly rate if you started up a new PI business, or what you have been offered as an hourly rate to becoming a PI. Now I want you to write down another figure. I know math is hard for me too, and that is why I keep it simple. Next, I want you to write down the total number of hours you want to work a week as a private investigator. Do you want a basic PI job, 40 hours a week, or are you looking at a part-time gig to help bring in some extra cash, walk you into retirement, or just a part-time PI business as a stepping stone into a full-time career? Whatever it is, write down the total hours you want to work a week. Then we will do a little math problem. Now, take that number, the total hours you want to work a week, and multiply it by, yep, you guessed it, 0.70. Wait, what? Were you expecting me to say multiply it by the hourly rate? I know this would seem logical, and your hourly rate will come into the equation really quick here. But first, we must get to some points of realization here. The reason I picked 0.70 to multiply your desired hours to work a week is to come up with what we would call potential billing hours. Okay, come here. I have a secret for you. Here is one of the biggest mistakes most startup PIs make. They assume their income is going to be their hourly fee times their total hours worked. So they assume if I charge $25 an hour and I work 40 hours a week, I will make $1,000 a week or $52,000 a year. Not too shabby for a beginner, eh? And at face value, that might seem to make sense. but does it really? What is left out of this equation? Come here again. Here is another secret for you. Shh, don't tell anybody else. Your business management hours is what is left out of the equation, but that is not all that is missing. And we will discuss the other missing parts to that equation in just a second. You have a lot, and I mean a lot of things you need to do to keep your PI business afloat. There is accounting time, marketing time, sales time. Yep, you must answer the phone and talk to customers when they call and close those sales. And here is another secret. Listen up. You will not close 100% of all your sales calls. In fact, if you really want to know the truth, come here. Another secret inside a secret. If you are really good at phone sales, you might close 25% of them. There is a lot of management time that goes into running a PI business, and this time is not billable time. So to get to a good revenue projection for your business, you need to figure out what your billable hours might be every week. For our example, we will assume you want to work 40 hours a week. When we take 40 and multiply it by 0.70 or 70%, leaving 30% of our work time for non-billable management time, we get 28 billable hours a week. Now we take those 28 billable hours and multiply it by our hourly rate, and voila, this is this is not your take-home pay. Okay, come here. I have another secret for you. This is the second biggest mistake new PIs make. They assume all of the revenue, all of the income to the business is their take-home pay. Yes, I did say all of the profits and the losses of the business pass through to you, the owner. But those billable hourly revenues are not profits. We still have to do a little more math here. Let's do another quick math calculation that will help us answer Gerardo's question. Is it worth it financially to be a private investigator? Now, for simplicity's sake, we will assume an hourly rate at $25. This is where most PIs start with if they start out as a PI in an entry-level position such as subcontract workers' comp insurance investigator. We want to work no more than 40 hours a week, so our billable hours on average is 28 hours a week. So our hourly weekly revenue on average will be $700 a week. And if we multiply that by 50 weeks in a year, we leave 2 weeks for vacation and personal time, we now have an annual revenue of $35,000. Now we need to take that $35,000 and multiply it by 0.70. That 0.70 represents 70%, which takes out 30% for expenses in the company. Now your company may be a bit different, but from my experience, 30% expenses is about average for most startup PI businesses. 35,000 times 70% or 0.70 gives us an estimated annual profit of $24,500. Is that enough for you to live off of? Come here and listen up. Here is the biggest secret of all to running a financially successful PI business. This is the real math equation you need to work with. The exercise we went through was of great value as it helps us to understand all of the data in play and how it affects our bottom line. What you need to start with is your desired annual pre-tax income. Go ahead, jot that number down really quick. Would you like your personal income before taxes to be, let's say, $75,000? What you need to do is take that $75,000 and do some fancy math here. Stick with me, this works, but I am not going to bore you with the details of how it works. I just learned this a long time ago and it has stuck with me all these years. Take $75,000 and multiply it by 0.01 or 1%. Then divide that by the 0.7 to take out our 30% in expenses and multiply that by 100 to get us to the 100% mark, and voila! You need to have $107,142.90 in annual income to have a pre-tax income of $75,000 with the consideration of 30% expenses and working an average of only 40 hours a week. I know that seems like a lot, but here is the last calculation, I promise, and this is an easy one. Take that $107,142.90 and divide it by 28 hours a week, billable hours, and divide that by 50 for our 50 work weeks a year, and boom. $76.53 per hour is what we would need to charge our client to meet our goal of $75,000 income before taxes. And why do I calculate before taxes, you might ask? I think this is the best comparison to a salaried job. So doing it this way, it would be comparative to a salary of $75,000 a year. To answer Gerardo's question, is being a PI something I would consider as a long-term position? The simple answer is yes. The more complicated answer is, well, it depends. That $75,000 will not be out of the gate for most people. You must understand all of the pros and the cons and the challenges of running a PI business, and luckily for you, I have a video right here that discusses those pros, cons, and challenges.